All right, last section for chapter 15, calculating federal income tax. So here are all of our adjusting entries that we've been doing. Our uncollectible accounts, our merchandise inventory, supplies expense, insurance expense, interest receivable, and depreciation expense. So these are all the adjusting entries we've been doing. And then you're going to post your adjusting entries. So you guys have done plenty of posting, so you know how to do that. So just moving stuff to the ledger accounts. And then once we post our adjusting entries, we will do an adjusted trial balance. So after the adjusting entries have been posted is an adjusted trial balance. So here is the adjusted trial balance, but then we need to calculate income before federal income taxes. So we're going to enter the account titles of all general ledger accounts. We're going to enter the account balances of all accounts except federal income tax expense. So you can see that one down here, federal income tax expense. We're going to calculate the total account balances of income statement credit accounts. They include the account balance of income summary if it has a credit balance. This could be on either side depending on if our merchandise inventory went up or down. So we want all the credit accounts from income summary on down. So we've got sales, purchases, discounts, purchases, returns and allowances, and interest income. And then we're going to calculate the total account balances of income statement debit accounts, excluding the balance of federal income tax expense. We will include the account balance of income summary if it has a debit balance. And then we subtract the total of the debits from the total of the credits to calculate net income. This bracket is in the wrong spot. It should only go up as high as income summary. You would not include cash, petty cash, or accounts receivable in your totals. So there's your numbers, our debits minus our credits, and that is our income. There are different tax rates are applied to different levels of net income. Each tax rate and taxable income amount on one line of a tax table is called a tax bracket. The tax rate associated with a tax bracket is called a marginal tax rate. So here you can see the different income amounts and then what your taxes are based on your income. Now, if you look here, like the $7,500, you get that by taking 50,000 times 15%. So you're including those taxes, and then you're going to pay 25% on $50,000 to $75,000 in income. If you're higher than that, then your totals would be $13,750 plus 34% taxes on $75,000 to $100,000. So here is an example. Net income before federal income tax minus the amount over equals your marginal tax rate. And then you do it times that percentage. So we had little over $103,000. So we're going to take that number minus 100,000 because that's the total there, and we get 3,518. We're going to multiply that by 39%, and that gives us $1,372.40. But we're not done yet because we have to add the minimum amounts from the brackets below us. So we have to add that to 22,250. So we add those two together, and that is our federal income tax amount. And then we're going to debit federal income tax expense, and we will credit federal income tax payable. And then you can see the journal entry and then see that get posted. And then we complete our trial balance by including federal income tax payable and federal income tax expense into our trial balance. And then once you include those, you total, prove, and rule the trial balance. All right, that's it. 15.4 work together is next.